hear me?
Yes, I hear you.
Okay, perfect.
Yeah.
All right, thank you everyone for attending another Wednesday webinar for real estate investment. I'm excited to have almost 45 minutes, 1 hour sharing what's happening in the market for real estate investment. There's always exciting news that's what I like about real estate investment. A lot of strategies, lots of things that are coming your direction, making the right decision, not making the right decision. Wow, I find a great property, and this kind of things is exciting. So thank you for coming back into this Wednesday webinar. Now, as usual, I'm going to go through the routine here. Is the real estate investment webinar. The reason for this webinar is to help you understand what's going on and move you from someone that is a beginner, doesn't know much about the market, moving you towards a direction that helps you to grow in your portfolio and make a ton of money. And that's the whole idea. So if you come into this part of the world of real estate investment and you're guessing, you're hoping, that's not the place for you. You have to be firm. Yes, I want to make money, and you can make a ton of money if you want to, but you really have to go for it full-hearted. Here's a quick real estate market activities, what's happening right now in 2020. We finished month of September, so I'm going to tell you exactly if the market crashed because of COVID-19 or we have a good solid market. And these are the data. These are the facts that you have to rely on it. And I'm not using one source of information. Personally, every day I go through different sources of information. So, but I'm going to, because of the time restraint, I'm going to cover only one part of it. It is from Toronto Real Estate Board. Residential status right now for the month of September. This is compared to last year. You see on the blue area, 42.3% of transactions that we had compared to last year, means we had a lot of homes we sold. And seasonally, compared to August, the month was a little bit slower in September. Now, this is a selling price. Did COVID-19 affected the price and market crash? Well, based on the data and information we have here, it never crashed. Actually, it went up 14%. Remember, every year, based on what we see historically, Toronto is selling something around 90,000 homes. So we are very much on schedule to hit another 90,000 this year as well. All right. Now, the month of September was a little bit, the number of transactions, the price growth was a little bit flat, but nothing to be worried. Now, here's a graphic source of information. This is showing the transactions, the sales in the month of September. July, August, September was very, very high. This was excellent. Now, this is sales to new listing ratio. This, if you look at month of August, it's coming down, means the market is shifting from a seller market into a more balanced market. So this is the time that if there is any multiple offers or bidding war, you will see conditions apply to this bidding war. Compared to a seller market, people close their eyes and they jump on the deal and they buy it. But now, August, September, you see the market is shifting into more a balanced market rather than seller market, or obviously buyer market. Now here is the average resale home price for the month of September. Continue going up, solid, with no problem, no hiccup here. Now, before we are talking to our guest today, Susan, I'm going to quickly cover the material that you have access to and I prepare for you guys. Of course, you can go to my YouTube channel. Please subscribe to this YouTube channel. Every week there are 1 or 2 new videos coming up, and I'm trying to help you understand what's going on and how you can invest in real estate. And believe me, there are a ton of subjects that I have to cover. So continuously I feed up this channel with all this information, and please refer me to other people that are real estate investors or they want to learn more about it. This is my Facebook for investors. Sometimes I put some deals up here, private sellers. They're going to go up here. So just join the Facebook I have here. Now, these are the 2 of the books that I wrote last year. One is specifically talking about the strategy with real estate investment called Successful Real Estate Investors. And the first one here is working very much with the mindset, which is crucial. Hey, well, here you go. Susan Flanagan.
You got it.
I'm getting it. This is the second time Susan is coming up, and the first time she was talking about how we can buy properties, investment with private money. Now I asked her, because there are a lot of things to learn from Susan. I asked her if she would like to join and come up again, but this time she was talking a little bit more of details of what is the con and pro with real estate private lending. And this is a subject that soon you're going to run out of money from your own pocket. Then you have to ask a joint venture to help you. Then both with joint venture, you start knocking at different doors. The banks might close the door, but if is a private lending money worth it and makes sense, why not doing it? I'm sure Susan is doing it. And Susan, I'm going to share the screen with you. So let me see if you can take over. Can you try?
No, still not. Let's try it again. Oh, there we go.
Works. Okay.
Okay. So, can you see that?
Not yet. Yeah, I have it.
Okay.
Perfect. Good.
All right.
So you have to press F5 to go full the screen on your PowerPoint.
What do I?
F5 is this function key called F5 on the top.
So I just push that?
Yeah, it goes full the screen for you. Right now I see your own.
Oh, you're seeing
You see the function key up there?
Yeah.
If you press it, it's going to go full the screen for you.
Oh, I just didn't hold it long enough. There we go.
Voilà.
Okay.
Perfect.
All right. Well, thank you again, Ashton, for having me speak to everybody, because I enjoy being able to share what knowledge I do have. So today, I mean, I'm really going to go into the pros and cons of private mortgages. And I thought I'd also add in there some updates to do with COVID, because obviously the mortgage industry is also affected by COVID. So if we have time, I'll carry on doing that. And the first thing here, I mean, the picture speaks for itself. Knowledge is the key to success. And that's where hopefully why it's great that you're doing these weekly webinars for people, because knowledge is key to moving forward, and hopefully, and it's something I can share tonight can help people in the area of using private money for their deals. What's good about it and bad about it. Whoops. Moved ahead. So first up, I guess, for not knowing who all is listening, I'll start from the beginning. What is a private mortgage? We hear the term. And so first off, the word mortgage, to understand, it's nothing more than a loan. That's what it is. It's a loan, but it's a loan that is for the purpose of a piece of real estate. So it gets the term mortgage. And so there's really three types of mortgages that people can get. If they go to a bank, an A lender would be your banks like CIBC, RBC, Scotia, like all the different banks that we see out in the street corners. They're your A lenders. And you have to be the most picture perfect candidate to be able to qualify with them. And they keep making the rules harder and harder all the time. And so then the next group of lenders are B lenders. And they're also institutional lenders. They're banks. But they're not ones that the average person hears about. They're in the background. And they're banks that people can go to if they're self-employed, if they have other, different issues that they can't go to an A lender. And then the third category is your C lenders, which is private mortgages, which is where I work specifically. My brokerage is called Private Money for Mortgages, very specifically for that reason, because this is what I focus on. I bring on lenders all the time that can fund mortgages. And when the phone rings from somebody who needs a private mortgage, then we can help them. So just with a private mortgage, it's anybody that has money. So it could be an individual like you or myself. I lend my own money all the time. I've been doing it for years. It could also be a business that has money to lend, or it could be a group of people that have pooled their money together to lend out. But it's not a bank. That's the only difference of the term. Now there's other differences as well for private mortgages. First off, they're usually interest-only loans. And the reason for that is they're short-term loans. And on the screen, it says 1 to 3 years. In most cases, it's 1 year or less. Because the whole point is, first off, they're very expensive, as you can see with the interest rate. Some people are probably staring at that right now going, oh my gosh, that's unbelievable. Who would pay that kind of money? But there's many reasons why you would, and you'll still be able to build your real estate portfolio paying those interest rates. And it's usually either a first or second mortgage. Now, the thing that's different between a private mortgage and a bank mortgage is the application process is different, but it's also faster. It's easier. You don't have to jump through as many hoops. The private lender is focused more on the property than you as the individual. So it just makes it a little different. The lender ends up having a registered charge on the property, just like the bank would. So if somebody pulled title, and in the past they might have seen that the mortgage holder was CIBC, now they're going to see that the mortgage holder is John Doe. That's the person holding the mortgage. So this next slide is basically for people that are thinking, okay, well, what would I do? What makes me need a private mortgage? Well, there's 3 things that we look at. There's the story, the property, and then the exit strategy. And if you truly cannot finance the property you're looking to buy, or maybe you already have a property and you need to take money out of it and you need private money, these are the 3 things that you need to be thinking about. Tell us about the story, why you need it. I'll give you a good example. There's one I'm doing right now. It's a second mortgage for somebody. Unfortunately, they've had health issues in their home. They got behind on all their bills, affected their credit rating. And so in order to fix their credit rating in this next year, they need to take out a second mortgage, fix all their debts, and then a year from now, they can refinance their first mortgage and pay back that mortgage. So that answers the exit strategy as well. So, so all of that is important to know when you're thinking about wanting to get a private mortgage. But I guess the next question is, why would anybody borrow private money when it's so expensive? And a lot of people, I've had people say to me, well, that's crazy. I can't believe that people would do that. Well, you know what? There's more reasons than we can count. And here, this next slide just shows a list of some of them. Common ones are debt consolidation. Maybe somebody can't verify their income. Might be somebody that is self-employed and they get a lot of cash payments. So the bank isn't going to look at them. They need to prove that income. But a private lender is more practical. They'll look at everything from a practical sense, and as long as they have security, if you did not pay, then they're happy. And that security comes from the equity in the house. The minimum that you could ever, I shouldn't say ever, I'm talking for myself, would be that you had to be borrowing no more than 80% of the value of the property, okay? That lender has to have 20% in there as equity if you didn't pay to give them protection. But going through this list, I mean, most of them speak for themselves, but they're all things, if you look at it all, these are things that banks won't look at. They want the perfect scenario. So they're not going to look at somebody that has their credit cards in arrear, or that they're doing this. When I say home renovation, that's a reason why maybe someone takes a second mortgage out. But it also might be the person who buys a property, and when they're buying it, they got a really good price, but it needs a lot of work. Well, the bank doesn't want to look at those kind of properties. So you buy it with a private mortgage, you fix it up, and then within the next few months, you either refinance it with a bank, or you just sell it and put the profit in your pocket. But I could spend, I mean, this slide alone, we could spend a whole hour talking about each and every one of them, but I won't. I just leave it that if, for people to just look at, to see that there are many, many, many reasons why somebody uses private money. Whoops, sorry. So the advantages of borrowing private money there's numerous ones. Now, the first one is that it can fund quickly. Normally when you go to a bank, there's so many hoops to jump through and it takes time. Whereas a private mortgage, I mean, really we could fund one within a week. I know some people say, oh, they can fund it within a couple of days. Well, that happens sometimes, but that's a little more unrealistic in most cases. But that's still, a week is still very fast. There's less requirements for a private mortgage than with institutional lenders. We still need to know your history, your credit history, need to know about your income, but we're not basing it necessarily on your income. But we do need to know, can you pay the mortgage payment? Like, that's an important piece of information that the lender wants to know. So let's say, for instance, as I'm going through assessing the scenario with a new client, and they go, well, this new project, I won't have the funds to pay the new mortgage until I get it renovated. Well, we look at that and we try and set it up that maybe the payments could come out of the, could come right off the top. There's different ways that we can set this up if I know your true situation. Private mortgages have flexible payments. That's what I was getting at right there. You can include a no prepayment penalty sometimes. They're available for all these out-of-the-box scenarios, like small condos that some banks won't touch, student rentals that banks won't touch, bridge financing, so many different reasons. I basically say to people, if the bank says no, give me a call. That's that's where I come in. Now the BRRRR method, I'm not sure if everybody's familiar with that. It would be buy, renovate, refinance, and repeat. That's where that term comes from. Oops, sorry. The ninth, number 9 would be equity takeout from one property to renovate or be a down payment on another property. Those are other advantages of using private funds. Now, I do have a section here. Ashton, I don't know if you want me to go into this. It's more going into being if you were to bring on a joint venture partner, yep, versus using private money. Would you like me to take a few minutes to compare that, or skip over that? For
now, skip over.
Okay, maybe that could be it. Yeah,
it's as a question, then we can go back to that.
Okay.
Sure.
Sorry. Okay, so I mean, I will take a second to explain the process for somebody if they're thinking about a private mortgage. It's no different than, first off, whether you're going to the bank or another broker for regular mortgages, but you still have to start with an application. You still have to do a credit consent, like that we can pull your credit. We still need to ask for certain documents. We'd need the purchase agreement, if you had an MLS sheet. But you do have to show that you have money for the down payment. I don't care where it's coming from. It could end up being from a second mortgage. It could be from a vendor take-back mortgage. It could be that your, Aunt Mabel just handed you, $200,000 cash that was sitting under her mattress. We're not picky compared to what the banks are. They want to see this down payment, and you have to have it in your account for 3 months, things like that. There has to be an appraisal, and we have to order it. I would highly recommend to people when they're doing things, don't order your own appraisal, because if it's not the appraiser that the lender would use, they won't accept it. So you're better off to wait and let that get ordered through the brokerage or the lender that you're going to. Now, just so you know, with appraisals, you pay for it. However, it belongs to the lender. You don't get to have a copy of it. Unfortunately, these are rules that we have to follow. Other things that would be part of the process, if you are a renovator on a regular basis and have been doing lots of flips and stuff, it's a really, really good idea to showcase your work. Put together a small portfolio, because at the end of the day, my job is the matchmaker, and I am trying to take all your information and now sell it to a lender, if that be the right way to put it. I'm trying to show them that you're a good for this mortgage, and doing things like putting together a portfolio of all your renovation projects really helps. Okay.
So Susan, a question I have for you.
Yeah.
Talking about selling it to the private bankers, I would say, is the proper packaging your idea, right? So it's very important to know your vision, what you want to do when you go for whether a flip or long-term investment. You really have to know the direction you go, and then based on that, you come back and say, okay, this is the package I'm going to give you, Susan, and you can present it to the lender. Am I right?
Yes, and I work on that with you, because I know what I need to get from the client, but also somebody who's done it a number of times, you're ahead of the game. You already know a lot of the things that I'm looking for, because it really doesn't change. But at the beginning, I mean, I'm walking you through, and I make it very clear from that very first time I meet somebody. We usually start off with a phone call to assess the scenario, and if it looks like something it can help them with, then I send them an email with all the things I need from them, and it's pretty straightforward every time. It is things like, even if they had, say, CMAs, comparables for after the project was done, that also helps. Even though the lender is not lending on a value down the road, they're lending on the value of the property right now. Okay. And that's another thing I will mention. It's kind of out of turn here, but with the property, and you're lending, so let's say, just for the sake of easy numbers, if the property is worth $100,000, a lender will lend $80,000. So you'd have to have $20,000 to put as a down payment. Now, if that property is also going to be renovated, say you bought it and it's not in good shape, it's going to be renovated, it will not be 80% loan to value. It will probably only be 70 or 75%. And the reason people have to understand that's important is because during the renovation, and they've already gutted it, and now they're starting to fix it up again, and the value of the house actually has dropped for a short length of time. And when that happens, if anything happened during that time, that puts the lender at risk. So they will not lend a higher amount loan to value. Okay. But these are things I discussed in that first phone call. Where else here? Before I get into the COVID bit, then let me just say too, and I didn't put this in the slides, if somebody is looking for a mortgage, if they're looking for a first mortgage, they can usually expect to pay interest rates between 7 to 10%. There's usually a lender fee involved in that as well. So it could be, a good example would be 8% plus 1% lender fee, or 8% plus 2% lender fee. So just for the sake of people running their numbers, I would say calculate 10%, so that if we can get less, great. But if not, can you do this deal still, doing it at 10%? You'll also always, as a borrower of private money, you have to pay for that appraisal. You have to pay the lawyer fee for the lender. And that fee can be anywhere between $1,500 to $2,000. You also have to pay a brokerage fee, and our brokerage fee is 1%. The minimum we would ever take is $2,800. So these are real costs that you have to figure in there, because you'll also have closing costs, your own lawyer cost. So you just want to know your numbers ahead of time so that you can see if the deal will work using private money. Do you want me to go into the COVID things right now, or see if there's any questions? Or
Is there any question? Anyone here? Sometimes we put the question on the chat bar. There is no time in chat. I have a question. So basically the fee to borrow money, let's round it up around 12 to 14% altogether. Make sense?
or on a first, yeah, let's say if the mortgage end up being 10%, the broker fee was 11%.
Yeah.
Well, it's hard to say. See, it depends on the amount of the actual mortgage. So I don't think I'd say it was necessarily 14%, but like as far as for the lawyer and the appraisal, those are numbers that are pretty constant.
That's right.
An appraisal on a single family home is usually between $400 and $500, right? If it's a duplex or higher, of course the cost goes up. And then apartment buildings and stuff, that's a whole different ballgame. Yeah. So to base the whole amount of financing on a percentage, you could do that just to crunch your numbers, but you could also just write out exactly what you're paying. Lawyer fee, say $2,000. Say $2,000 for your own, just in case.
Okay.
You know?
So you have to have some money to start with regardless.
Yeah.
Is it part of your 20% down, or is on top of that 20% down?
No, they still they need a down payment, and then they also need to have these costs covered. So that's where sometimes what happens is, especially if an investor can get a property under market value. So let's say it's worth 400, but they were able to pick it up for 350. Then when we get the appraisal, if the appraisal comes in at 400, we can, in many cases, we can get the lender to lend to you based on the appraised value, not the purchase price. Whereas a bank won't do that. Okay, so that's another nice bonus of a private mortgage.
Technical question. How about after 1 year, like you get it for a short-term period? Let's say 1 year, you cannot get a mortgage for this, neither sell it. Can you either continue or get another mortgage?
That's a good question, because it's not an automatic renewal like regular mortgages are, because the lender wants to assess the scenario before they'll decide. They're assessing the market, plus they're also assessing you as a borrower. Were you good on your monthly payments, that sort of thing. And if they will renew, great. If they won't, for whatever reason, then we just turn around and find you another lender. But that's why it's really, really good to be organized ahead of time. If somebody is using private money knowing they're going to refinance in a year, if they think it might take more than a year, then I would say, let's get you a private mortgage for 2 years. You're better off because it costs you more to go back and try and renew.
Of course.
Yeah.
Of course. And with your experience, majority of people approaching you to get this kind of mortgages, these are investors, these are like end users. And if it's investors, what kind of investment are they doing?
Actually, most of the people, it seems that a huge majority of my business is through investors. And I think that's mainly because I'm also a real estate investor, and that's where I network. I'm always out there doing my thing and also meeting other investors. So it's a snowball. But I also do help regular people. I'm just doing one right now that is through a friend of a friend of a friend, and they need it. And theirs is a second mortgage for equity takeout. So like I said before, there's so many reasons, but as far as for investors, the most common is those that are doing house flips, or those that are doing they want to buy a property. They can't qualify at the bank yet, but they do have funds. They're better off, in my books, in my estimation, in most cases, they are better off to use private money to get in the marketplace and then refinance later. They're better to do that than do a JV partner. And that's what those other slides were going to explain, because in many cases, a JV partner, you're giving away too much equity. So even though private money sounds expensive, it really isn't. You're not giving away equity. You're paying a huge percentage, but for a short period of time, right? So the other common scenario for investors is that they'll use one property to take equity out of because they have needs elsewhere, whether it's another purchase or doing renovations on a place, whatever.
So are you saying instead of getting home equity loan from the bank, we get it from a private lender, right?
Yes.
Okay, got it.
Yeah.
Okay, we have 15 more minutes or 20. If you want to cover certain topics here that would help us.
Okay, I don't know if, because we're in the middle of COVID still, I thought, it might be helpful. People have concerns how COVID is impacting. So I'm not going to speak as far as regular mortgages, because like I say, I don't deal with the banks, so I'm not really paying attention to where they're at. But as far as private money is definitely still available. However, there definitely are some lenders who are putting a pause on things right now. And the reason they are is because there is no crystal ball what's going to happen in this next year. So if they, some lenders are super cautious and saying, I'll just let my money park for now and not lend it out. So I'm very aware of those lenders out there, but the ones that still are, they're happy to still be in the, to be out there doing it. But as I said in the next part of the slide, please be patient, because right now finding you the right lender might take a bit of time. That's why it's also important. Don't throw a mortgage at me and give me 5 days to fund it for you because, to close it for you, because then I can't find you the best deal. So avoiding short closings. Now, the other thing, though, the second point on this, and if you put yourself in their shoes, you've got money to lend, you like lending on mortgages, but no one has this crystal ball, you're going to probably not, you're probably going to offer it at a lower loan to value. And for anybody listening to understand what that term means, it means the percentage of what they'll lend. House is worth 100,000 and they say, fine, we'll lend you 80%, you would get 80,000. Okay, but right now with COVID, someone who might have said 80% before might be saying 75. So just be aware that the numbers, loan to value is lower, and also interest rates might be higher in certain situations. That's why we have to assess the entire deal before we can look at what would be a reasonable rate for you. And in some cases too, because the lenders are a little more hesitant, they might ask for added security to the deal. So it might mean if you have another rental property and that you might be able to package that in there as well, and we put a charge against that property as added security to the lender, and then I can get you a higher loan to value. Okay. The third thing is deferrals. I remember when COVID first started and everyone was talking about their deferrals with their mortgages with the banks. Well, some people were also asking to do with their private lenders. And all I can say to that is, yes, it's on a case-by-case scenario. If somebody was really in trouble and needed to a deferral on their mortgage, but it truly is up to the borrower to contact the lender directly. We don't do that. Once this mortgage has closed, I have put the borrower and the lender together. You would be then connecting with them to see if they would consider letting you skip a payment and add it to the end, or whatever your request was, okay? But just so you know, whenever something like that happens, interest continues to accrue. So, you know, there's no free ride. So if you truly don't need to get a deferral, I wouldn't if it were me. Oh. Appraisals, I'll just talk on that for a minute because this affects everybody, whether you're doing a private mortgage or a regular mortgage. What the appraisers are saying is that they each have, every appraiser has their own way of dealing with the COVID rules, but in general, what I'm seeing is that they might ask you if you can take photos of your property inside, not necessarily out because they can do the outside, but inside, and or a video. There's times they'll do that. Any assessment information that you have, you gather it up to give to them. Any building specifications and so forth. Because the whole point is if they can avoid coming in your home or in any home to do it, they're going to try and do that. However, ultimately the appraisal impacts the decision of the lender. So they need to get as much information as possible still, even if they go the photo route or the video route. Okay. And just to recap, pros and cons of private mortgages. Okay, the pros, again, easy to qualify. They're short-term loans. They're great for flippers. There's a short approval process. Terms can be very flexible. We look at what are your needs, then we present it to the lender and see what we can make to make it a win-win, okay? It's a great way great for debt consolidation, for self-employed, for new immigrants, for anyone that has bruised credit, okay? Some of the bad things about a private mortgage, it is a short-term loan. That can be a bad thing as well as a good thing. It is a high interest rate. Other costs associated with the loan also add to it not being a bonus using private money. And you must have a very clear exit strategy. So I've had I'm not saying lots of people, but a number of people that have come to me and they're only seeing their immediate situation, especially when they're looking for a second mortgage to help them out. They know they have equity in their home, but they don't have an exit strategy for what they're going to do when the loan comes due. And in those cases, I'll be quite honest, I don't take them on. I don't present them to my lenders because if they're not clear on how to get out of the mortgage, it could be a really bad scenario in the end, because if you're not planning for it, you know, crap happens, right? And so we don't want to ever see somebody in a position that they've put themselves into a very bad financial situation. Yeah, and that's, unless there's more questions, this is, I'll just leave that screen up. If anybody did want to talk to me further to do with it, I mean, there's so much to know in this area. But like you said at the beginning, Ashton, it's a necessary need when people are trying to build their portfolios after a while, because they can't qualify at the bank, and private money can be very helpful.
Okay, so let me ask you a question here. Let's say I'm interested in borrowing some private money. Is it the way we do it? I grab the phone, give you a call. Actually, by the way, your phone number is 519-803-1642.
Yep.
So I give you a call, said, Susan, help me here. I found this property. The real market value in that neighborhood for this property is 600. I find it for 500. And how can you help me? Can you also go and study or elaborate on any scenario we bring to you, kind of brainstorming together from your perspective? Is that what you do as well? Okay,
so let's say that was the call. I'm asking you a ton of questions back. Like, for instance, so you're buying it. So first off, where's this property located? I want to know that.
In Oakville.
Oakville, okay. Right off, that tells me in my mind, that's a check mark. If you said, oh, it's in Timmins, it doesn't mean it can't happen, but that's not as big a check mark as Oakville is.
Yes.
Right? So I'm asking where it is. Have you already put in have you already put an offer in on this place?
No, I'm just
No.
bringing it up to you.
You're just thinking about it. Okay. What is your, so why is it that you think you need a private mortgage? Have you already exhausted the banks?
Yes, I did.
Okay. And why would they not give you a private mortgage? These are key questions I need to dig into for somebody.
Okay.
And the reason I do that, I'll be honest, Ashton, is because I get lots of people come to me thinking they need a private mortgage. And in the end, what we're able to find out is, yeah, sure, CIBC said no to them, but they didn't even open the door to a mortgage broker who has access to all those wonderful B lenders. So by the time I'm finished my conversation with you with all the questions I'm going to ask you to dig out of you more information, it very often happens that I'm not doing a private mortgage for you. I'm referring you to another colleague who does institutional lending and let you go that route. If by chance they cannot help you get a or B lender, then I'll get you a private mortgage.
Got it. And is there anything that the private lender would look at? Like, are they looking into the details, what I want to do with the house, the possible selling price? Are you actually open the book and see what the neighborhood is selling for, kind of pre-qualifying my action, or you just leave them the money and then
so the mortgage itself will be based on the property as is. It
Okay.
has to be, okay? But what is key though still to know what renovations you're going to do, I say to you, give me, break it down, give me an estimate with timelines, costs, what you're planning to do on it, and then what do you think the after repair value is? Now, you being a realtor, you could just automatically pull CMAs, but if it's somebody who's not a realtor, I say then if you can go back to your realtor and see if they can get you comparables of what the property will be worth once you bring it up to the standard you're expecting. I still present all that to the lender to show them what the whole story is, and then it helps show what their exit strategy is. But they're not going to base how much they lend you on the after repair value. They're just not. Now, as I say that, those are my lenders will not do that. There are people I know out there that have lent private money based on that. If you can find them, great. But that's not common, because think about it. They're lending on, they're speculating is what they're doing then. They're lending on the fact that you say you're going to turn this project into a different, a more expensive house, but it hasn't happened yet.
Okay. So can we also borrow money, worth-wise? Can we also borrow money to buy and hold a property for 3 to 5 years, using private money as the step in to the deals, and then second year switch to, let's say, CIBC? Is that what?
Oh, absolutely. Yeah, and that's why, again, going through the whole scenario with you and making sure. So if we truly came to the conclusion you cannot qualify right at this point in time with an A or B lender, but you can in a year from now or 2 years from now, then we look at, then why not buy it now, as long as you can still afford those monthly payments? Because remember I told you it's interest only payments. Yes. However, those payments are much higher than bank mortgages.
Of course.
So, or not much, I shouldn't say much higher. They're not paying down any principal. They're just paying the interest. So there's still a large amount.
So basically, anything we buy, and this is for audience as well, anything you buy, whether you underprice buying it or you can add value to it. So after a year, you can really get a solid mortgage and you finish with private lender.
Yes. Yeah, and that's what you want. I mean, ideally, don't drag it out a year. If you can get it done sooner, great. Get out of that private mortgage as fast as possible. Yeah, but it still at least allows somebody to purchase the property still, right? And then work on, I mean, it could be something as simple as they were waiting for another house in their portfolio to sell. It didn't sell yet. They have some credit card debt that they needed to fix up. So they just need some time to get their debt ratios lined up.
Okay.
No problem. Use private money and then turn around, and as long as they get that done within the year, they refinance it out.
Based on your recent activities, where all this like buying and selling with private money is happening? Is it very much to GTA, or a lot of activities that you are lending money, you're going out of GTA, let's say to London, Ontario?
They're all over. In fact,
Okay.
I'll be honest, I mean, I get lots of, for up in Barrie, for Peterborough area, Collingwood, Collingwood I'm saying because I have a property up there, sorry. London, Kitchener, Hamilton, St. Catharines, like they're all over the place. I mean, there is just no, because I can do this for all over the province, GTA is not the only place. And in fact, GTA might be harder at times for somebody doing the BRRRR method.
True.
Wouldn't you say?
Yeah, I agree with you. Unless you really go through conversion, such as having a finished basement, legal basement, or making a duplex or triplex. If you don't, if you come across a property that has potential, just don't go straight forward. I want to buy this single homes and I'm renting it. It doesn't really work in GTA if you want to have a positive cash flow, but you have to convert it to something different, such as, I'm not saying student housing, but if you can make it duplex or triplex, that would be a no-brainer. But if you cannot do that, then that's why it's a lot of investors are pushed to go out of GTA because GTA is not worth it. It's worth it, but it's expensive, and you cannot necessarily make positive cash flow. So you go to Kitchener-Waterloo, and even there, you have to find a good deal. Hamilton is a different story, but it's each case scenario that you have to really cherry pick and study. You cannot generalize. I go to Kitchener-Waterloo because I can make a lot of money. Not necessary.
Yeah, and as far as from the private side of things, it does depend on each deal because you have to crunch those numbers to make sure it's going to work. And that's where I say to people, don't hesitate. Call me ahead of time. Let's work through the numbers together. So that phone call that I'd be having with you, Ashton, I'd be taking notes and asking a ton of questions so that my wheels are turning as you're talking to me. And then we can, run it out together to see, like, well, do you have enough for the financing as well as your renovations, as well as having to make your mortgage payments? And then is there still profit at the end? And if it all can't come together and give you profit at the end, I go, you should think twice about this one.
True. That makes sense very much. So give me a call if anyone has a question. My phone number is 647-407-4049. This is Ashton, and call Susan 519-803-1642. What we like you to do is, because we do investment, we are investors. Somehow I find in myself, and I could understand it through your conversation, Susan, call me and I'm going to sit down with you. Yes, I spend some time, but this is what I like to do. So consultation, talking over the phone, I'm passionate about talking about real estate, and I like to see other investors are become very successful. I hear that through your conversation as well, Susan. So that's why I said, if I talk to you, would you talk to me too? And share your experience and knowledge. Absolutely. It's not, guys, it's not about you jump into one deal and you're happy. It's doing everything properly from day one. If this is your very first investment, or you've done many other investments in the past, it doesn't really matter. You have to go one step at a time, and each property on its own as well. So do your study as much as you could. I'm available. Susan's available. There are a lot of other resources that you can use. Do you have any last thing to say, Susan?
No, I just a huge thank you for having me. And yes, thanks very much.
Pleasure joining us. Maybe we can have another talk with your experience about another subject in private lending soon. And everybody, thank you for joining us for this session again. And feel free to contact us, and all the best. And see you hopefully next week.
Okay.
Thank you. Take care. Bye-bye.
Okay. Bye.